Good morning, everyone. Kayla Lowry here from the Oregon Association of Realtors. Today we're talking about the 4 buckets of money. And this is super exciting. We have Chris Bettis here. Chris teaches for the GRI program, and you also may have seen him from our Military Relocation Professionals certificate. He also teaches that for NAR and OAR. Chris is the current owner of Fluent Mortgage and is also a loan officer and can help you navigate these challenging conversations with your clients. So, Chris, take it away.
Good morning. Thank you, Kayla. Hey, everybody. The 4 buckets of money and no to know. I'm Christopher J. Bettis from Fluent Mortgage, VA Fluently. All right, so real quick, why you should listen to me. I'll race through this, not to brag too much, but in 2018, I was named Mortgage Professional of the Year nationwide, voted by my peers, so that'd be the equivalent of you receiving that from NAR. Won some other awards, one of the highest certified instructors in the state of Oregon. I've also produced, you can see that, service, national level, state level, chapter level. And some of my proudest accomplishments are being married to my wife, Michelle, for 26 years. And then our 2 daughters, Rose and Hannah. My hobbies include fitness, grappling, and motorcycles. So that's me. All right, so the agenda for today, no to know, the 3 must-have buckets, the non-negotiables in that niche bucket. All right. Now, hopefully, there's some repeat people on here that maybe seen me in person, been on a webinar before. I always have the same goals, the 3 of them, every single time. I want you to learn something, and I'm really confident I'm going to fill your mind with some more knowledge, with some more information. You're going to walk away today knowing more. But I don't know about you, I've gone to a couple national conventions and not been any more successful. Really excited, I learned a lot, but no more successful. And the reason why is I didn't implement. I didn't convert knowledge into wisdom. So at a couple stages, I'm going to motivate you and ask you to do something because of this. That's going to make you more successful. Okay. That's going to make you make more money. That's going to help you close more transactions. That's going to help you help more clients. That's going to put you higher in the stats. That's success, right? When you implement knowledge into action. And then lastly, I know it's mortgage, I know it's a webinar, but can we commit to having fun? And hopefully you're chatting and, hey, raise your hands, comment, yeah, let's do it. If you're in an office where you have multiple people, please high five each other. Today's a great day. You get to fulfill 2 of the American dreams. You are self-employed, one of them, and you help other people fulfill their American dream, which is home ownership. So what an amazing industry you work in. So you're gonna learn something, you're gonna do something because of it, and we're all gonna have fun. All right. So ideally you'd have a dimmer. So turn down the lights a little bit because I want to take you on an emotional and a mental journey at first. All right. First thing we're gonna do. So lights off, dim the lights a little bit, or you can just close your eyes. And so deep breath. And so you're in bed. Man, it feels like you've been sleeping. The alarm, there's no way the alarm went off. It's got to be late. You feel completely rested. Like that never happens, right? We're in sales, completely rested. Wow, how long did I sleep? And you turn over and you look at the alarm clock and, oh my gosh, I got an hour left. There's no way. You go back to sleep, you look over again. Man, the alarm hasn't gone off. I'm literally 20 minutes early. I just can't wait any longer. I'm ready for the day. It's that day. It's that perfect day. If you can feel it and envision it, start feeling it, right? So the lights come up a little bit, you're getting out of bed. And I don't know what the first thing you do is, whether you read, you have coffee, you work out, you pray, whatever it is, that's what you start with. And it's an amazing day. You maybe run faster and farther than you ever had. You hit higher weights than you have, that PR. That's today, all right? You're starting to feel it. You jump in the shower, you get out, the cutest outfit ever. You do your hair, you do your face, you are looking good, you're styling, right? Just perfect. Like, oh my gosh, not only are you feeling great, but you're looking great. You're a good looking person. And when you look good, you feel even better. So it's that day. So you jump in your car and oh my gosh, and we know it's winter right now and it's a little bit gloomy and rainy a lot of times. It's one of those freak warm days where we get like 70-degree weather, not a cloud in the sky and sunny. And so hopefully you've got a Wrangler, you've got the top's off, you've got a convertible. And so you drop your top, you're in your car, you're starting to roll the office, right? It's that most amazing day. You're just relishing the day so far. You're just enjoying it. You feel good, you look good, it's that day. And the reason you're even more excited, so excited, is today's the day. So for you top producers, you're gonna close the biggest transaction you've ever closed in your life. $4 million, $3 million. You're gonna make $100,000 literally off this transaction. You're gonna buy that second home, that vacation home, that car, that boat. You're gonna become a listing agent and take control over your time, not working weekends as much or nights or on holidays, right? That'd be fun. And then the opposite end of the spectrum, for some of the newer people, it's not always easy. Like, this industry can be tough. You've made it. You're going to close that first transaction, and anybody said you couldn't do it, you're going to prove them wrong today. You're going to pay your rent. You're going to pay your bills. Like, you're going to eat. Like, you did it. Today's the day, and you're literally on this perfect day driving to that closing, right? Are you feeling it? And then as you're relishing the day, all of a sudden, your favorite song even comes on. Yeah, you're just enjoying life. And then all of a sudden, what interrupts your song is ring, 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 ring. Like, yep, I got to answer it, even though I'm rushing this day, no matter what. Realtor, you answer your phone, you always answer it. It could be a business. Oh, awesome. It's actually the banker for the transaction you're supposed to be closing here in just a few minutes and you're driving to. So you pick it up. Hey, how's it going, Mr. Banker, Mrs. Banker? Well, and they sort of talk about layered risk and all sorts of stuff. And you're like, okay, you're scaring me a little bit and you're confusing me. Bottom line, what are you saying? And they're like, bottom line, that transaction is dead. It's not going to close. Now, how's your perfect day? Yeah. What do you do? Well, I've posed this in multiple classes before, and I'll tell you a couple of the responses. First one, probably the most valid. I might even as well, if that were the scenario. They're like, I would just bawl, I would cry, I would just sit, I would just pull over and just cry. Valid, get that emotion out. Another person, they're like, I would throw up right in my car right then and there if that was the scenario. Okay. Another person said, I would drive into the nearest telephone pole and kill myself. And I'm like, oh my gosh, that's way too extreme. Let's get you some help. Let's take that off the table. A good cry, maybe even throwing up. Okay, I get it. Now that's an emotional response, right? What do you do next? Because this is reality. This isn't a if, this is a when. Because statistically, per Ellie Mae in 2018 and 19, 25% of transactions, or applications, I should say, do not get to the finish line. They don't. 1 in 4. And if you add some sort of component of construction, rehab, it goes up to 40%. So this perfect day, that transaction that's not going to close, or at least hearing no, that's a reality. So that's what this is about today. All right. Is what to do when you hear no, after you get past your cry or whatever it is. All right. So I know it's a webinar. I understand your business. Some of you may have to bounce out. You get that call and you're maybe going to get that $4 million listing. You're going to get that first sale. Do what you got to do. It's a webinar. You can come back. But if you get nothing else from me today, seriously, nothing, this concept alone will make you more money. And that's no to no. That you will never, ever, ever accept the first lender no. No to that no. Because there's always hope and there's usually a solution. All right. So this concept alone will make you more successful and more money, with no more hours, no more leads, no more money, no more staffing, no more work. You just say no to no, and then you implement what we're going to talk about over the next, say, 50 minutes, 40 minutes. All right. And please, if you have questions, chat. Kayla will jump in at any point. I want this to be as interactive as possible. It's a lot more fun that way. All right. So we're going to look at the 4 buckets of money: mortgage broker bucket, correspondent bucket, the depository bucket, again, the 3 must-haves, and then we're going to look at the niche bucket. And so depending on your model, depending on your business plan and what you work on, that's the bucket we're talking about. All right. And I can't emphasize this enough. The most critical thing is not the bucket. first. It's the person. It's the banker. It's the broker. Please, please, please keep that person. Whoever your number one is, be loyal to that person. Whoever's earned that spot, if you like them, you trust them, you have a relationship, that is most important. I don't care what bucket of the three they fall into. Relationship trumps bucket, okay? I mean, unless it's a niche property, you know, that you're connected to a manufactured home, connected to a teepee with a second story stick built on 1,000 acres in a flood zone. Yeah, that's going to be niche. You're going to pick a special banker or broker for that, of course, or a funky property. But when you hear no, so again, person first, bucket second, but when you hear no, not if, then we go to the other two buckets. That's how you're going to get more yeses and be more successful. Okay. All right, here we go. No to no. Again, never ever accept a lender no. So 3 must-have buckets. And they're not ranked in order, by the way, in terms of best to worst or worst to best. I just had to pick an order, so it happens to be in this order today. Mortgage broker, what are they?
Hey, Chris, we're not getting any sound on this video. Is there supposed to be sound?
There is, and that's strange. It's not coming through. So, all right. Well, thank you. I thought we beta tested this yesterday, so no sound on this video. Great. Then I will rewind it really quickly. Thank you for letting me know, and I will narrate. Actually, let's do this then. What a mortgage broker is, it's a person such as myself who has access to multiple lenders. I'm not the lender. I'm not a bank. I don't do auto loans. I don't do personal loans. All I do is mortgages, and I shop and I seek out 20, 30, 100 possible lenders in the industry to find the perfect rate, the perfect path, the perfect transaction for you that's going to be as smooth and as easy as possible. So again, not my money. My job is to shop the entire market and find the perfect source of funds for that transaction. Okay. That's too bad. That was such a cute little video. You guys would have enjoyed it. All right. Who or how? So one of the best ways, if you're not sure if somebody's a mortgage broker, if you don't have a mortgage broker in your bucket right now, again, this is non-negotiable. You need to have that bucket, is findamortgagebroker.com. Perfect. It's actually pretty complete. I pulled Eugene just because, like, Portland as an example has such a long list it wouldn't fit on a screen. In the Eugene market, I think the only 2 lenders that I didn't hit here would be like Directors and Western Mortgage Brokers. So this site does a really good job of finding out who mortgage brokers are in your market. You search by zip code. The one thing, please be aware, their reviews are completely wrong. It claims I have no reviews. We've actually just updated 91 reviews already in a little over a year, 90 of them 5-star, 1 4-star. So it's just not porting in for some reason. So again, reviews, no, but who's in market, yes. Okay. All right. I guess probably most importantly, besides who they are, is when do you think mortgage broker? If they're not your number one person at this point. So we've got some of the lowest VA rates in market. And as of this morning, I'm seeing anywhere from 2.75, 2.75 to 3.10%. That's the highest that I'm seeing in terms of just normal stats as an example. APR on that would be like 3.234%. So lowest VA rates in market, 2s. Conforming rates, again, some of the lowest. That's what we do. We shop through technology and shopping. We find some of the lowest rates in these 2 particular products. One of the things we have that no one else has is a pre-check appraisal waiver. So literally just with an address, no borrower, no other information, just an address, we can plug that into a system very quickly and find out, wow, no appraisals required. And so a real example, I had a $750,000 home, highly sought after, multiple offers, like you don't see that in your market, right? Multiple offers, quality, 760 credit score, putting a good chunk of money down, like 40%. Well, I pre-checked them. Yep, no appraisal. So in that case, hey, 2-week close, no appraisal, let's go, this thing's done. Well, yeah, he got his offer accepted, and not highest, he just was best. So in those cases, run it by him, get your appraisal waiver. Yay, we're gonna win on that multiple offer situation potentially. Also with some mortgage brokers, have a lot of connections with private money and non-QM lending. Non-QM, think of modern day subprime. So it's back, they just call it something different. Next, when else? Bad credit. They can actually deal with some of the lowest interest rates, or not interest rates, but credit scores in market. So for example, FHA, VA, as long as you get an approved eligible, they'll go down to like a 500 credit score. So 500, not the 640, not the 620, not the 580 some people have, down to 5. So again, it just depends on if you get your Fannie or Freddie approval. Appraisal speed. Because a mortgage broker doesn't own, and let me use a term, an appraisal management company, AMC, that was created in the Dodd-Frank economic meltdown. Independent third-party company was created to stop collusion supposedly between broker and appraiser. So that appraisal management company, since we don't own them, we're not limited to one, same thing, we shop. And so one of my lenders, as an example, has 6 different AMCs. So if we need a faster transaction, I might ask and say, turn time 2 weeks, too slow, turn time 12 days, too slow, turn time 10 days, too slow, turn time 7 days, no, turn time 5 days. Yeah, you win, I'm picking you. So for faster speeds on appraisals, right now brokers are winning. Oh, let me do one disclaimer. This information is valid only until the beginning of the program. As you know, mortgage changes like every 5 seconds. So I'm joking a little bit, but it truly is. Any of the names I use, any of the ratios, rates, whatever, that's only valid up until now. It's a constant change, okay? Lastly, right? No to no, like that's the whole premise behind what we're talking about this whole hour. So no matter what, if your number one is a non-depository banker, a correspondent lender, if it's a big bank, if your number one's that, when they tell you no, they will at some point, automatically you need to reach out to your mortgage broker, right? So no to no. So there's the reasons why you would think of them potentially first or when they're going to win, but also no to no. So no matter what, no equals the next one. Hey, before we jump into another bucket, is there any questions at all regarding mortgage brokers, who they are, when to use them, what they do?
I'm not seeing any coming in.
All right, that means I did such a good job explaining that with that soundless video. Let's keep going. All right, here we go. Okay, so remember, that's knowledge, right? Hopefully I filled your mind with some knowledge. You have no questions, you totally get it. The key is to do something. So question to you, and it's rhetorical. You don't need to put it in the chat box. Do you have someone from this bucket? Yes or no? Now, if you do not, who are you going to make an appointment with today? I want you to pick 1 or 2 people right now, mortgage brokers. If you don't know, turn to the person next to you, ask your principal broker, ask the top producer, who are the best you've ever worked with and why? So I want you to write down a name right now, or 2. And then literally what I want you to do, and I'm going to give you like 30 seconds, slide dial them, text them, email them. And as a little pivot or side note, if you're not familiar with slide dialing, you should probably go to the tech conference. Kayla, just a shout out to you. You're doing such an amazing job with education. It's just a total level up. I'm so excited to hear and see all the stuff you have coming up in 2020. Like you guys are literally, it is shocking what all they're going to do to raise your level and just OARs throwing down. So the tech conference, you're going to learn so much. So if you don't know slide dialing, go to it. I'm confident something like it will be there. So please slide dial, text, and email that one person for Mortgage Broker. Make them an appointment, ideally in their office, maybe for coffee. So I'm going to do a little music and then let you do that for about 30 seconds. All right. Okay. Let's do it. Let's get the next bucket in. All right. So the non-depository banker, the correspondent banker, the correspondent lender, they use a couple different names for themselves. So what is it? Well, sometimes they fund with their own money. Sometimes they have a line of credit and then they resell it. Bottom line, if the loan's closing in their name, the same name of whatever the entity is that you're working with, that's a banker. So for me as a mortgage broker, the loan, the transaction's never going to close in my name. It's always going to be in the name of United Wholesale Mortgage, Freedom Mortgage, whomever it is, okay? It doesn't matter. The point is, if it lends in their own name, that's a banker or a lender, all right? So in their case, they do. What's interesting to see is it really sort of started off on this channel of wholesale with the economic meltdown. A bunch of brokers shifted over to this channel because of regulation and fear, but really starting to see a strong presence of retail as well. So they can be a retail lender, a wholesale lender, or even sometimes both. So it's been an interesting anomaly on that case. Again, AMC, if you hear the term, that is an appraisal management company. Sometimes they own their own AMC, sometimes they don't. Already mentioned this. And I think you're seeing this too in your world. So like as an example, Zillow, right? iBuyers, we're watching Zillow come in, who is just really a data aggregator, and they're now a major power in real estate. They do it now. So we've seen the same thing in this market here in mortgage. Like some of the biggest players, and actually the biggest player in lending right now was a tech company that came in as now a non-depository lender. Who are they? Actually, let's back up a little bit. Are any questions at this point on what that is? Because I know that might be a new term for a lot of people. Anyone want me to expand upon that, or any particulars? Okay, cool. Means I'm doing a good job explaining. All right, so the Rocket Mortgage, Quicken Loans. I'm pretty confident you've heard of them. Historically, it's always been a big bank owned market share. Like the biggest producing, most loans, biggest volume was Wells Fargo in the past several years. Quicken Loans overtook them. Literally in this little middle channel, this tech company, data aggregator, you know what they do. They've become the biggest and the baddest in terms of retail lending, and they're moving into wholesale too, which is really exciting that some people get to use them on the broker side as well. So they're huge. Freedom Mortgage is another name you may not know that is a correspondent lender. They have a retail and a wholesale presence. I don't see much of this retail in Oregon, but we have a ton of it in wholesale. Guild Mortgage. Now we're going to hit some major players that I'm sure you know the names of. Oregon really is dominated a lot by these sort of this bucket of money. So Guild Mortgage, Summit Funding, Loan Depot, Finance of America, Mortgage Express. I mean, there's so many, I couldn't throw all the names up. In my market alone, you've got your Peaks and your Opuses, and there's a number of players here who do a really good job. All right. When do you think correspondent lender? Truly their biggest advantage, in my opinion, is their technology. And it's just in economies of scale. They're a much bigger entity than me with only 2 people shop, but they're not so big. And I don't feel like I'm being up on Wells Fargo. I'm going to be politically correct about this. Or excuse me, B of A, Bank of America. They're the biggest, like they're gigantic, and they've done it for a reason. They obviously do stuff really, really well, but they're really slow. So Like I can almost close a transaction how long they get a fax and they digitize it and transfer it over. I mean, not really, but just they get to move super fast because they're not super big and they only focus on mortgages, but they're big enough, they've got enough pockets, deep enough pockets, they can have technology on a really cutting edge scale. Also, since they only drive down the same path every single time, it's going to be smoother. So kind of that analogy of we're in our Jeep, we're rolling. If you go on the same road every time, you know that road every time and really well, it's going to be easy, right? But you have one road for the most part. Teams, man, they love teams. If you like working with teams, if you got a big team yourself, this is really where you're going to see the biggest teams. If you like your account executive or not account executive, loan officer to not be in office talking to your clients as much and really to be out with you more often, co-marketing with you a lot, doing stuff together, co-branding. I'm like, that's the bucket you really want to be in. Okay. Next, they've got some portfolio loans. So I won't go into all those, and that's really, you need to get to know your correspondent lender. Just ask them what portfolio, what little niche side products do you have that's not your normal Fannie, Freddie, VA, FHA, that's really just unique and proprietary to your entity. Funky properties. So again, you're not going to send that, I mean, unless we're going private money, that you're connected to a TP, connected to the manufacturer, the stick bill above. I've really done something like this on 1,000 acres in a flood zone, right? Bless them with that property. That's why I'm laughing. But the reason why, and only if they own their own appraisal management company, as an example. So they own them, even though the loan officer can't talk to them, they have a lot more direct communication. So when I was a correspondent lender on that log home, as an example, we literally could almost have a conversation saying, no, I don't want comps that are closer. Use bedroom communities, go farther away, but I want actual log homes. That's going to help me get to the finish line. So again, fast appraisals broker, funky properties, you want them to own their own AMC. So correspondent lender, big bank. And then lastly, what do we know? No to what? Exactly, no to no. So if your number one's a mortgage broker, if your number one's a big bank, a depository lender, then no matter what, when they say no, it'll happen eventually. And if you produce, then you send it to this person. You send it to whoever your favorite person is in this bucket. All right. We're about to go to the do something section. So any questions? I know this one sometimes confuses people, but I mean, you're obviously on a webinar for OAR, so you're probably the best of the best and don't have any, but please, there are no dumb questions. Please ask if you have anything about this that you don't understand. Okay, we're gonna move on then. So we're back into the do something section. So do you have someone from this bucket? If you don't, that was a yes, no. Who are you making an appointment with? I'm sure you saw some names of people that you recognize. Write down that name, just like we did last time, 1 or 2 names. All right, and so I'm gonna play some music. I'm gonna step aside for 30 seconds. I want you to slide down. I want you to text them. I want you to email them right now. Make your appointment. Don't put it off, because you know as soon as we're done with the webinar, you gotta get back to business. You gotta get back to making money. You gotta answer that client back. Set the appointment, do something. No to no, we gotta get those buckets filled. Okay, let's do it. Okay, hopefully it gave you enough time again, but we got to keep this party moving. So the third critical, essential, non-negotiable bucket is your depository lenders, your bankers, your FDIC insured, your retail. It's called several different things. And then also your credit unions. And I'm kind of, even though, let me back up. Depository, why? If you can literally drive up and give them money, not just ask them for a loan, that's a depository lender, right? And I'm going to make kind of a distinction between the big 5, the biggest and the baddest in the nation, and then we're going to talk credit unions, because really you're going to want to think one versus the other at a different point. But this is essential right here. Finding one with no or the least amount of overlays. And so an overlay, even if you don't ask, every time I teach a class, about half the class doesn't know this term. It's a mortgage term. And in case you're not aware, everything's done electronically now. Everything's done through automation. And so almost always. So when I get your borrower's information, their application called a 1003, name, birth date, social, income, assets, etc., we plug it usually into one of two systems, either Fannie Mae or Freddie Mac. And so we're going through DUDO, Desktop Underwriter for Fannie Mae, or we're going LP, Loan Prospector for Freddie Mac. And so what, you're gonna get one of three things, either a thumbs up, yay, it's gonna go, approved eligible. You're gonna get a maybe, refer eligible, or you're gonna get a no, this isn't going, right? And we always want the thumbs up. So I'm sure you've gotten a pre-approval letter before and they've ran the automated approval. Yeah, we've got the thumbs up, let's go. And then at the finish line, so it seems just like our story, wow, what happened? How are you turning this down? Well, the underwriter wanted some additional conditions. And you're asking the loan officer, how do we get here? I thought we were approved. How did we not find out about this until the end? Well, overlays. They maybe haven't bumped into that scenario before. And even though Fannie says they don't need it, and it's the right, say Bank of America as an example, they have some overlays when it comes to manufacturer, Wells Fargo, all of them do. All your bigger players have said, I've taken losses in a certain product. I'm not doing that again. That's nice. Fannie Mae says that's safe. I'm going to make it a little bit harder. I'm going to do it slightly differently. And so that's an overlay. So if you can find one with no or the least amount of overlays, you can be more confident on that yes at the beginning. All right, makes sense? Any questions on overlays real quick? All right, I don't see any chatter. Again, they're going to have their own AMC typically or an appraisal pool. So for the funky properties, that's who we're going through. Another thing I like about them, again, no channel is best. I played in all these worlds. I just happen to be a mortgage broker right now. It makes the most sense for me based on market today for various reasons. They have the most products. So car loans, personal loans, commercial loans, business loans. And so let's say all of a sudden at the last second, they end up short cash to close. Maybe they really quickly with the same person get a personal loan. I've done a self-employed person or referred them to them for transaction, real estate, plus a business loan, plus a personal loan. They even collateralize like an automobile or something. So they have a lot of variety in their products, all right? I mean, these are all names we know, right? Bank of America, who they are. So we're looking at the who. Bank of America, Wells Fargo, JP Morgan Chase, US banks. I mean, these are the big boys. Credit unions, and this isn't my top pick. This is through Credit Unions Online. This is the top 25 based on volume in Oregon. So On Point out of Portland, Oregon Community Credit Union out of Eugene, Selco out of Eugene. Look at Eugene representing. Yay, go Eugene. And then finally Medford Road Credit Union. So there's some powerhouses right there. And we'll look here in just a second why and when you would talk to those people specifically.
Hey, Chris, we do have a question on the line.
Yeah, cool.
What question do you ask to see how many overlays they have and sound like you know what you're talking about?
Wow, that's a great question. So first off, I would ask the question and hopefully they're honest or they know. Unfortunately, I have people tell me all the time, and this happens all the time in mortgage, hey, no overlays. And then I'll ask them, well, what about this? Well, we don't do that. What about this? We don't do that. What about this? We don't do that. Well, those are overlays. So what I would say is you could probably reach out if you're not sure to one of your principal broker. You could reach out to a top producer. You could reach out to me, reach out to your number one. And a lot of your better producing people, we know. We know what the overlays are for the most part. We know, and I'll pick one that's a pretty decent sized depository lender, Umpqua Bank. They weren't on here, but I mean, they don't have many overlays. 620 FICO score. They don't do a single wide manufactured home VA. I mean, those are two examples. Just know if it's below 620, they don't do it. And if it's a single wide manufactured home, even though VA says they'll do it, they won't. So there's two examples of an overlay. You just kind of learn it in time. Ask your mortgage professional that's your number one. They can help find out for you as well and protect you. So wonderful question. Did that answer it like clear as mud or? All right, I'm gonna continue then. So when would you think big bank or credit union? So the big banks, man, they want those jumbo rates. They're super jumbo products. They're rates you can't even touch. I don't even try to say literally go to B of A, go to Wells Fargo, go to JP Chase, go to whomever. Like 3.25% is what I heard for Bank of America on like a $2 million loan. No mortgage insurance, 10% down. Like that's shocking. That's so far below conforming even. It's stupid low. Good luck closing it quickly. That's one of the disadvantages. But the reason being is, and if it doesn't make sense, the reason they're going to incentivize that person so low is because they want their assets. They want that investment money. There's that $3 million, $4 million, $5 million, so they can make interest on that money. So it's okay if they don't make any money, or maybe even take a little bit of a loss in that loan, because overall they're going to win. So again, if you got humongous loan amounts way above jumbo, and the conforming loan mints just changed, but if you're above that $1 million mark on a fourplex as an example, or whatever it is, I'm sure you're seeing webinars and videos all over the place about the new limits. They have the best rates, okay? When I think credit union, disclaimer, besides VA, those little down options with their community reinvestment acts, the down payment assistance programs, they truly thrive and shine here for the 0 down, the 1% downs, the 2%, like Oregon Community Credit Union, I know is known for this product as an example. They really do it with fantastic rates, cheap. That's one of their specialties. Bridge loans, yeah, that true bridge that's hard to find nowadays. This is where you're going to find it. So maybe they have a ton of equity in the property they're selling. Unfortunately, they already listed it, so we can't access that equity in advance. They found a home they want to buy, and prior to sale, you want to buy the new home. Well, that's a bridge. So they slap both properties together. You got tons of equity. You close the transaction. Yay, happily ever after for you. And then once the other property sells, you just pay down the balance. They reset the payment based on the new loan amount. There's your bridge loan. So you're not going to a mortgage broker for that. That's a depository lender. Again, funky properties, please don't send me that manufactured your TP. Just the AMC. It's because of the AMC, not that I don't want to do that loan. They're going to have portfolio products. It's their money. They can do what they want. You see, that historically was the big banks. Now this is going to be the powerhouse coming in the future. Remember TRID a few years back? And what does TRID stand for? The reason I drink. Not really, I'm just kidding. It's TILA RESPA integrated disclosures. The main thing it impacted is we went away from the good faith and the TIL and the HUD disclosure to the loan estimate, the closing disclosure, and then you wait 3 days and you can actually sign your documents, right? Well, TRID 2.0 didn't get a lot of attention, but the main thing it did is really helped your small depository lenders, your credit unions. And I won't get into the politics and why really this just got carved out. I know the man who helped craft most of it behind the scenes. They no longer have an ability to repay. They don't have to meet it literally legally now at this point, your small depository lenders, if they keep it in portfolio. So, I mean, this is where we're going to see a lot of new products being rolled out. We've seen a few. I get questioned on this every day, like cannabis as an example. I think this is where the first place you're going to really see some institutional cannabis lending again come out, like MAPS Credit Union does. Obviously checking savings accounts, but those funky things, those things that are hard to get, where if you're federally licensed, it's just not going to happen. They can make it happen locally. So, and then lastly, when do we think them? No to no. So if your broker told you no, if your correspondent lender told you no every single time, never ever accept the no. We're going to ask a banker, right? We're going to ask a depository lender. All right. Okay, any questions before we actually put this into motion? All right, so do you have a big bank or a credit union in your back pocket? Someone that you have as a go-to? Yes, no. If it's a no, who are you making an appointment with today? Write down a name or two, get their email, get their phone number so you can text them or email them. You know the drill. We're gonna do it again one more time. And so I'm about to turn on the music. I'll give you 30 seconds. Do something. This is how you're going to be more successful, make more money, help more clients, close more transactions, finish number one in the rankings. Slide dial, text, email, and go. All right. Hopefully you made it happen. Okay, so we're done with the 3 essentials, but no matter what, no to what? No to no. It takes persistence. This is not an easy industry we're in. All right, so now we're at the niche bucket. All right, so depending on your business model, depending on how you market yourself, depending on what you like to do, your sphere, etc., you may take multiple cards from here, multiple names, or you may take none of them. It just depends, but I'm still going to break down some knowledge for you. So first, if you do any manufactured home lending, twice move manufactured, if you haven't done one lately, that used to be easy. Fannie, Freddie would do it. Not anymore. And that's not new news, but it's not super. I mean, we've done this historically not that long ago. You just can't find them lending anymore. So one of the best places I've found for it, again, as of the second, it could be old news as of the time we're done with the webinar, but as of this second, is Banner Bank. Now here's the keys though. Twice move manufactured, Banner Bank. Your client has to have a 700 plus FICO score. If they don't even send it to them. And they have to have, this is probably the bigger key, 20% down. This isn't your 0 down. This isn't your 3%. This isn't your 5%. So, but if you have a borrower, 700 plus, 20% down, twice move manufactured, and they want that property, boom, Banner Bank. That's not a no. You just call Banner. And they'll do it as a purchase or a refinance. Now, KeyBank, side note too, they're fantastic at lines of credit. They'll even do lines of credit on an investment property. So lots of equity investment property, don't have a down payment. Could do a second on their investment property. There's your down, go get your other home. So that's bonus. That's not in the paid programming. So with KeyBank though, they'll literally do moved a million times, not just twice, not just 3 times, 4 times, a million times. It doesn't matter. They don't ask. Also, I mean, this blows my mind. They'll do this plus this. They'll do a pre-HUD manufactured. Now, interactive really quick. Quick pop quiz. When is the HUD cutoff? What year, month? When is it? Go ahead, type it in.
Into your question box.
HUD cutoff. When did it occur? Anybody coming in? I'll give you a hint then. The year, it's sometime in the 1970s. There's a hint.
(1978 or 1972?
Okay, somewhere between.
1976?
Nice. Okay, we got a winner on that one. And but it's more complicated than that because it's mortgage, right? It's not, we have to make it really tough on you. I'm sorry. So what month now? 1976, what month?
May.
A little later.
January.
June. And okay, and I'll just tell you, and to make it even more complicated, it's June 15th. So June 15th, 1976. Yeah, it's mortgage. We got to make it really, really hard on you. So if it occurred June 16th, 1976, yay, no problem. You can finance it conforming anybody. Well, not everybody, but you can. It meets rule. If you go before June 14th, 1976, oh my gosh, almost nobody in there will do it except for private money, owner carry. Well, KeyBank will, and most people don't know that. Some keys, kind of like above, they have to already be on title. It has to be permanently affixed to the ground. Doesn't have to be a foundation, but just no wheels. It can't roll away. And it has to be exempted. So I'm not sure about every county, but it used to be, and some people still call it detitled. It used to be handled at the DMV. It's now handled through the county, and they exempt it, meaning they combine the real property and the manufactured home. They slap them together and make it all real property. Okay, that's exempting or detitling. Lastly, refi only. Yeah, refi. So when I do this live, everybody starts to get mad at me. They're like, why would you tease me? You know, we're a bunch of realtors. We do purchase transactions, right? Why would you tell me about a refi lender? So interactive again, real quick. Think about it. How can you leverage this knowledge? How could you get to the finish line knowing this key bank would do this as a refi potentially on this pre-HUD move 4-time manufactured home? How can you get to the finish line? Go ahead. Any ideas? Anybody typing, Kayla? Can you tell?
Nothing coming in yet.
Oh, fine. I'll give you multiple ways to get the finish line because I hate no's personally, and I'm pretty creative. I was in private money for about 10 years exclusively. So one, they could simply pay cash and then turn right around and refinance it, right? All cash. They could get some money from mom, dad, whomever, pull it out of their 401k, some sort of investment account, retirement account. Be careful. Talk to someone with counsel because you might have 60 days to get that money back before you have a big tax consequence. Maybe you go sell or carry for 70% of it and you have some money down. Maybe you go 30% down on your own money and go private money. So, and then you turn around, there's the purchase, you get paid, yay, they're untitled, it's permanent, fixed, exempted, and they turn around and do a refi with KeyBank. So about 5 different ways to get to the finish line on that pre-HUD move twice manufactured home. Now, my suggestion, protect your client, have them get in touch with KeyBank first, make sure they're approved for this takeout loan before you stick them in that, because that's not going to be fun for everybody. As a side note also, a lot of people at KeyBank don't know they even have this product. So my go-to, unfortunately, who I did a bunch of it with, Adam Strastis, I recruited and pulled him away into private money. So just again, they do this. I think Christine at the Coburg Road branch, KeyBank still knows this product pretty well. So, but just find whoever your person is, talk about it, and get a resource for that if you play in manufacturing a lot. All right. Lots of land. So again, it might be different 5 minutes from now, but as of right now, in town, US Bank's the king. So if you're doing lots in town, US Bank hands down has the best product, up to 80% loan to value, just access to utilities. They don't have to be there, and they have amazing rates. So for that leverage with the best rates, US Bank's the place to go. Now for out of town, not in town, but out of town, Northwest Farm Credit. Same up to 80% loan to value, unless the loan amount's over 250, then it drops to 75%. All they need is proof it's buildable. They don't even need utilities connected, just prove it's buildable to them and they'll go. So in town US, out of town Farm Credit. And please comment questions. If you play in either one of these worlds, feel free to reach out and ask questions. I'm gonna just sort of race through it if not though. Acreage and farm. There's a Farmer Mac product that some of your correspondent non-depository lenders do, and these aren't the only two. These are just the two that I personally know do these, and I've seen them do several of them that are really good at it. Acreage, rural, pseudo farm. It's really more of a hobby farm, not income producing. It could be even up to 150 acres though. That Farmer Mac product is really cool. Rates are still pretty good. The appraisals are still pretty reasonable. It's just a great product. But if we're talking true farm, like it's a dairy farm, it's income producing, like it says farm on it and there's money being done on it, then farm, Northwest Farm Credit, farm, then we're going farm. And they'll even do construction with the acreage and the farming combination. So that's their bag, that's their world. But if you can fit it in the box, that's a great way to go. Next, private money. I truly think everybody, if you're in real estate, should have at least one private lender in your back pocket. And what I did is I just picked the 4 lenders from Eugene that I know and trust and are quality. I mean, there's a lot of good private lenders throughout the state. It's just, this is in my backyard. I've even worked with a couple of them, so I can speak about them a little more articulately. So historically, what they've been known for, and this really is where no matter what, if you get told shot down, no on the first 3, I would always reach out to your private lender. Let that really create a portfolio lender, see if they have a solution for you. So last second no's and speed. So you got no on your top 3, reach out to a private lender. Structure vesting. So I use private money, even though I have great credit score, income qualified. Well, as an example, I bought a 3-parcel property that I found out and nobody else could. Little loophole. basically that it could be one of the additional lots was buildable. So I made it buildable, I pre-sold it, but I need to perfect the lot lines. I had to adjust it around, right? So if I gone conforming money, I wouldn't have been able to manipulate lot lines. I would have been stuck. All 3 lots would have been tied up. Well, I went private money, only secured 2 of them, and already sold it. Money was sitting in escrow when I bought the property, so that was pretty cool. Perfected my lot lines, and then simply refinance conforming money. So sometimes with structure, even though you qualify conforming, this is the way to go, or if you need speed. Also vesting, if you need to go faster in certain circumstances, instead of going commercial, if you want to title it in an LLC or an S Corp or a C Corp, residential lenders don't like that. That's when you might look to a private lender as well. And then lastly, non-financeable flip properties, leverage to go into rental properties. I mean, this is a way to make that happen where you're doing, instead of 2 a year, 10, 20, 30. If you can find it and do it, they're going to go. And so Gallican Johnson has in these 4 sometimes some of the lowest rates, and they're great for owner occupied. Precision Capital, I've seen them do probably $100 million in just flips and rental property leverage. AIC's built their business off construction and development, and Seton Funds is the baby of the group. And man, the owner, she came out of the commercial world, really complex income producing development, like that's her world. And they're all starting to blend a little bit, but them and one other, owner occupied, Precision, again, the leverage is the best on investment, construction, and then commercial. So actually, any questions on private money before we sort of do something section real quick? Okay, so is there someone from this bucket that we just looked at that's going to fit your model that you need? Write down their name or 2 names, at least 1 slide dial, 1 text, 1 email. Come on, just 30 more seconds. Let's do it. Let's do something. Okay. All right. Hey, so that pretty much wraps this thing up almost. So I'm confident, I hope, but I'm pretty confident you learned something. I'm sure I dropped something you didn't know already. Ideally, you had a good time. Webinars are great, but truly, if you can get in person ever, please do it. It's interactive. You can ask more questions. There's more energy. It's more fun. You get to high five everybody in the room, and you get to network. And that's really where your learning is going to get propped up. And OAR is throwing down this next year. I mean, there's going to be so many GRI, PB, I mean, just more search tech conferences, like it's shocking how much they're doing for you this year. And then lastly, the most important thing, please, if you didn't already in those 30-second breaks, please do something, because I truly want you to be more successful and change the world for at least more clients. All right. Okay. So commitments, please commit. This is your commitment for 2020. Remember, we started here, we're finishing here. If you commit to know that you will never, ever, ever accept that first lender's no, that you will check with the other buckets, I guarantee you, I promise you, I've seen it time after time, you will be more successful. You will close more transactions. You will help more clients. You will make more money. You will finish higher in the rankings. Whatever success is to you, maybe working less, you will do more in 2020, because there's always hope and there's usually a solution. I'm Christopher J. Bettis, Fluent Mortgage, VA Fluently, and man, OAR, you guys rock. Thank you for the opportunity.
Thanks, everyone, and thank you, Chris. As always, your CE certificates will be processed and they will be in your member profile within 1 week of this webinar. And it was recorded and will be placed on our online course catalog within about a week. So if you know anyone else who would benefit from this information, feel free to share it with them. And somebody says, looking forward to learning more from you in the future, Chris. Thanks, everyone. Have a great day.